Hello, everybody. Welcome to the Wednesday live stream. So just like the title and thumbnail suggest, it looks like there's a winner, and it looks like it is Ethereum. And this is from actually Tom Lee as he talks about it. And what he's saying is that there's a reason that it's winning. He says it's all because of downtime or no downtime, which I thought was interesting. But I think it's a couple different reasons, but we'll get into it. But first, before we get into the Tom Lee interviews and to see what he's talking about, and we're going to actually talk at the end about how I think there's an even better play than Ethereum, and it is not in the crypto sphere. It is outside in traditional markets. I wanted to just bring this to everybody's attention, the Bitcoin ETF flow. And I watch this every time because I'm taking a look at what, I don't like to call it smart money, we'll call it big money. And big money, as these investment advisors tell their clients, you should be in a Bitcoin ETF. And they tell their clients this, and then they're free to do whatever they want to do. However, I think there's something behind the scenes going on because, as you can see, over the last 3 days, or actually the 5th of August, 4th of August, 1st of August, because it's not open on the weekends, we can see that there is, as far as like with BlackRock, it is an outflow. They are selling off their ETFs. Now, whether that be because of the individual investor or it's because they're telling their investors like, hey, this is a good time to actually get out, take some profits. Whatever it is, we can see that there is a negative correlation here as BlackRock, Fidelity, Grayscale, which is usual suspects, are selling off their shares. And the 1st of August was even worse, almost $1 billion worth. They were, or actually yesterday, I should say, 196 million. We don't have the numbers for today so far as with the Bitcoin ETF. But look at this, Ethereum ETF. What do you notice? You notice that on the 1st of August, BlackRock didn't do anything. However, yesterday, or 2 days ago, I should say, there was a big, massive outflow, 375 million. They were selling off. But the 5th of August, which is yesterday, they're buying again. And I don't know what exactly is going on, but I like to see where the big money is doing and what they're doing. And we can see that, of course, Grayscale is selling off. That's what they do. But it's just interesting. You've got Grayscale, Van Eck, Invesco, and Franklin Templeton actually buying. And it says, or it signals that there's a little bit more strength in the Ethereum ETF. So I'm not saying that Bitcoin will collapse. I'm just saying it's quite interesting what's going on. This would get down to Tom Lee. So Ethereum 6 months ago was dead. I didn't really think that we had too much going on with Ethereum. We thought, hey, maybe we'll actually do something. But here we are today. And we see corporations, institutions, businesses put it on their balance sheet. And the big one would be Tom Lee with Fundstrat, or actually BitMine. And he said this in 3 different occasions over the last 24 to 48 hours, where he's saying, like, look, one of the big reasons that Ethereum is winning and is being chosen, is being put on these balance sheets, is because it's had 0 downtime. Ethereum has had 0 downtime. And I thought about that, and I thought to myself, you know, we talk about downtime a lot when we're talking about specific digital assets. Solana kind of comes to memory, Cardano as well. And we hear about these things, and it's like a talking point or something for someone who doesn't really have exposure to talk about and say, hey, Solana has different problems with downtime. Of course, they fixed that so far. I mean, they've had a downtime for over 9 months now. But regardless, when he talks about this, it's something I didn't really consider. I'm like, okay, well, that's great. And he's going to say some other things again. And he says something pretty interesting here, and it makes a lot of sense, is why Ethereum is having its Bitcoin 2017 moment. Now, as a reminder, I wasn't too big of an enthusiast as far as Ethereum, but one thing did shake me. And that shakiness is when Robinhood came out and chose Arbitrum, which is a layer 2 solution for all of its tokenization of real-world assets and tokenization of stocks. And I thought to myself, why did they choose Arbitrum? Because there's other faster ones that are out there and much, much cheaper, I believe. And they didn't. They chose Arbitrum, and that's Robinhood. And they have a pretty clear understanding of what their clients want, especially on Wall Street. So anyhow, take a listen to this. It's about a minute and a half or so, and it really kind of lays down the foundation of why things are going pretty good. And then again, we'll get to some of the big plays as far as like what else is out there. Make sure you can hear this perfectly. take a listen as to why Tom Lee thinks this is downtime is a big pivoting point, and why Ethereum is having its 2017 moment, just like Bitcoin had in 2017.
Yeah. Well, to me, Ethereum's having its Bitcoin 2017 moment again. And to give perspective, in 2017, Bitcoin was under 1,000, but that was the year when Wall Street discovered that the narrative of Bitcoin is digital gold, and Bitcoin has gone to 120,000 now, so 120 times increase. In 2025, a couple things are happening around Ethereum. The first is the Genius Act is now making stable coins kind of green lighted, which is the ChatGPT moment for crypto, but it needs a smart contract, so it doesn't work on Bitcoin. The second is the SEC is pushing forward with Project Crypto, which is actually asking Wall Street to move the entire financial system onto the blockchain. Ethereum is the preferred choice for Wall Street because it's had zero downtime since inception, matching what the banks want, 100% uptime. It's also the most legally compliant and secure blockchain because it's recognized in the US and it's the second largest blockchain. And the third is almost all of it is taking place on Ethereum. JP Morgan's building their stablecoin on Ethereum. Robinhood is tokenizing on Ethereum. You know, the custody banks are doing it on Ethereum. So it's really where Wall Street meets, but that's also where AI is meeting crypto, because as you know, as we tokenize and move towards robots, you need a token economy to control them, which is taking place on Ethereum.
And which is why you're now the chair of BitMine, which is looking to build out this treasury of Ethereum, not so differently.
And let's just stop there. So there's a lot to unpack there, right? Because now people would say like, well, Tom is the ultimate shill. Is he not the CEO of BitMine, which is putting Ethereum onto the balance sheet? And you're 100% correct. Of course, it's for us to say like, hey, this is why this is so great because of this, 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 and this. However, those points there about no downtime, the tokenization, the different acts, you can kind of see where things are going. Is that the end all be all? Well, I will say this. And it was a funny thing. He said, well, Wall Street wants it up 24/7. That's a funny thing because they haven't been up 24/7 since its inception, right? I believe that the markets close every single weekend. Same thing with my banks. And it's not like that has really hampered them too much. So when he talks about, well, Wall Street wants it to be 24/7, I believe they do. But maybe it's a funny thing coming from Wall Street. This is what they want now, this specific junction. Anyhow, let me know what you think about that in the comments section. And of course, I'm sure I will get a lot of comments on Ethereum versus pick your altcoin. But then there was this last piece here. And again, Tom said some pretty interesting things about modeling and about the narrative and about the things that are behind it and seeing the big picture. And I think we kind of lose the forest for the trees. And just listen to what he says here. This is Tom on Bankless. And I have to remember some of these things as well because it's a pretty good lesson. So again, just take a listen. It's about a minute long. Go from here.
No one's model has ever served to explain everything. Have you seen anyone's spreadsheet model explain Bitcoin's price correctly? People who are trying to model ETH based on a spreadsheet are the same people that try to come up with an S&P price target based on their bottoms up earnings model or their ISM, and that's why no one gets the S&P call correct. There's a phrase I learned when I first started on Wall Street, which is it takes a whole lot of PE to offset E. People spend too much time modeling the E. That's the spreadsheet thing you're talking about, but it's actually always about PE. Ethereum's price is not going to be based on the contemporaneous transactions recorded in any single week. It's really the recognition of where that number is 5 years from now. So I don't think people should be building models and saying they can articulate and anchor a view on the price of anything. If there's anything I've learned in the equity world, you can't be grounded by a rigid framework. And that is the mistake people make. When you give someone a spreadsheet, then you get analysis paralysis because then suddenly you don't see the bigger picture that ETH is literally the legally compliant blockchain. And I think it's a big stumbling block for people. I'm not against trying to build frameworks, but to me, ETH at $3,600, it's kind of ridiculously undervalued. So maybe that's the most important takeaway and not trying to give someone a spreadsheet to build for 5 years and try to understand. And
that could be true. I will just say before we move on, and I see the comments, I I don't really care if Ethereum makes it or not. I hope it does. I have a big fat bag of it. So I'm not here to say you should only be in Ethereum. You should only do this. I'm not an investment advisor. I can't tell you what to do. However, I'm just giving you some of the best information I possibly can to maybe, if you're not into Ethereum, maybe look back in that direction like I have and said, maybe did I miss something? Me personally, I'm still buying the same things roughly every single day. It is Bitcoin, Ethereum, Cardano, Solana, SWI, and a host of other different altcoins. Again, I don't really care which one makes it. I just want one to make it, and that's pretty much good enough for me. I don't need to dominate everybody. I just want to have my one. And if that is the one that you own, so much the better. Anyhow, let me know what you think about all these things in the comment section. And then to finish up, it really does come down to, well, how far can we go? This is, I think, what everybody knows, the Bitcoin dominance sheet, Ben's website in the Cryptoverse. You can get 10% off that first month if you'd like to check this out. A whole lot of information in there. But Bitcoin dominance right now, I think is, look at that. It's over 60% again, 60.9, almost 61%. That's great, but I want to know about Ethereum. How about Ethereum dominance? Anybody thought about that? Well, why not? So let's take a look at the Ethereum dominance. And we can see that it actually bottomed out, like Ben was talking about, right around 15th of April, 2025. And it was only 6.96%, 7% really, of the entire market cap of the crypto sphere. And now, of course, we have gone up to roughly 11.8%. But in a brighter time for Ethereum, you can see that it actually topped out. Well, actually, if we go all the way back to 2017, I don't know if you knew this, but it was a third. It was 32.65% in 12th of June, 2017. That's when things went crazy. But in 2021, we can see that it actually was 21%. And where were we at now? 11, roughly. So could the price go up? I think it could. Maybe it could actually eat into that dominance of the entitled market, but we'll see. My question is this: is Ethereum the best play to do? Because Bitcoin's done really well for me. It's 75%, 80% of my portfolio. But if I would have invested more into MicroStrategy, I would have done really well, like really, really well. And MicroStrategy, if you don't know, I know you know, but they put Bitcoin on their balance sheet around August of 2020. You can see here it was $14. If you want to max out, can you tell on this chart when they put Bitcoin on their balance sheet? Of course you can. It's when there was a blip after it was flatline forever. Moving back, look at this, $12 to a top of $434. Again, I would have done much better just putting in MicroStrategy as it was a proxy for Bitcoin. Now take a look at Bitmine. Now, this looks not too bad. Bitmine, ticker BMNR, Bitmine Immersion Technology, is the one that Tom Lee is sitting on top of. Can you tell when they announced when they were going to do the Ethereum onto their balance sheet? Of course you can. It's right here. It was $4. Then it skyrocketed to $135. And now it's at a paltry, 38 today. But maybe this could be a better play. Again, I'm not telling what to do, but I think I'm going to have to buy some of this Bitmine Immersion Technology, or BMNR. What does it look like over 5 years, I wonder? Oof, look at this. Imagine if the stock price went back up to this level, $596. That was in 2021. Everybody was making money back then. But you can see what happened here. Same thing as MicroStrategy, flatline until an announcement of Ethereum. Bing, bang, boom. So this is looking good. Maybe this works out for everybody. Let me know what you think about that in the comments section. And then to finish up, we need to talk about some catalysts. And this is over on CNBC, Neil Kashkari, who's one of the Minneapolis Federal Reserve pres. And he talks about everybody's favorite topic, which is rate cuts. And it looks like there's going to be 2 this year. So just take a listen to this. I found this interesting because all of a sudden it was all about tariffs. It's going to be the worst thing of all time. And then it's like a backtrack and, it's not too bad. Anyhow, take a listen to this. It's about a minute long. Make sure you can hear this. And I'll skip ahead of the good parts. Take a listen.
Look at those numbers and say, maybe he is too late. What do you think?
Well, there's 2 categories of data that I'm focused on. There's a bunch of data that I know and that I've got confidence in, and there's data that I don't know and we're not going to know for a while. The data that I think we know is that the economy is slowing. Housing services inflation is gently declining. Non-housing services inflation is coming down. wage growth is coming down. We've seen the jobs number, and consumer spending is cooling. All of that suggests the real underlying economy is slowing. I've got confidence that that is happening. The part that I don't have confidence yet is what are the ultimate effects of tariffs going to be on inflation? And what I'm realizing is we may not know the answer to that for quarters or a year or more. And that tells me as one policymaker, I need to start leaning more on the data that I've got confidence in. The economy is slowing. And that means in the near term, it may become appropriate to start adjusting the federal funds rate.
If that's true, do you think you were wrong? What the market is doing right now is, to some degree, discounting that the tariffs, at least as we know them today, stay that way.
Well, I'm assuming the tariffs will be persistent. Whether the tariff effects on inflation are persistent is the question that central bankers care a lot about. And that we're not going to know for a long time. And does it bleed over into inflation expectations? So the path that I think about, I put down 2 rate cuts in my December last year, December summary of economic projections for 25. I maintained 2 in March. I maintained 2 in June. 2 still seems reasonable to me for
before
this
the
year.
end of the year. So 2 more.
Potentially.
So 2.
But now we've got a lot of data to come in. But sitting here today, I could see 2 rate cuts this year. But if it turns out that tariffs are having a bigger effect on inflation and it's more persistent, we could do 1 or more rate cuts and then we could pause. If inflation really ticks up because of tariffs, we could even then raise again. The tariffs are just such an unknown right now, what they're ultimately going to do to the economy. I don't want to make any promises about the longer term future.
Great, fantastic. I'm happy for everybody here. So it's a funny thing. All of a sudden it was tariffs. We don't know what's going to happen. We're just going to wait and see. Now it's like, we don't really know. It could be up to a year, but we got to fix this right now. It looks like the economy is cooling, and I have to agree. So there's going to be some rate cuts, and he said 2. Now, the last thing I will say is this. As he talks about rate cuts, because these are always usually on the Fed meeting, just so you know that we've only got 3 meetings left. So July passed. And then the next day, we got all this revision for the jobs reports, which came out and we lost 250,000 jobs. Crazy. And then the next one will be September 16th and 17th. There's like a 85%, maybe 90% chance that they're going to cut rates 25 basis points. Then you got October and then December. So if he's saying that we got 2 rate cuts, that's going to be great for the market. If tariffs come in and super hot and it raises the inflation numbers, they'll probably pause. I don't think they'll actually raise. I said to myself, it wouldn't be a bad thing for them to do that. And now here we are. So I think, again, moving into September, October, November, December, I still see it as a nice little bull run unless something crazy happens. And nobody knows. And that's it for today. So look, if you like today's video, give it a thumbs up, consider subscribing. We talk about it's time sensitive. Now we'll get into the comment section. I'll answer all your questions and we'll get out of here. All right. Mark says, I never get into a staring contest with Kashkari. Every time I see Kashkari, he looks like the guy from The Mummy. The guy from Egypt. And I always look at him like, is that the same? No, it's a different guy. He's an actor. But yeah, I mean, he looks like a very intense gentleman. That's all I'll say. Good for him. ETH has the ultimate downtime called a hard fork 9 years ago. That is probably true. But I had actually looked it up. I had to chat GPT that question. And no, the Ethereum has never been down. And I thought, well, if it's never been down, maybe that's, this is what Tom is saying. Again, take it with a grain of salt. I think Tom is kind of incentivized maybe to push the Ethereum agenda. If there's no downtime there, then what's the problem with Cardano? There's no downtime in that situation either. And it's not like Ethereum is super fast and it's not like Cardano is super fast. So what's the issue? And it's always been up 100%. Now, of course, if you go down that road and say, well, has SWI ever gone down? Has Hyperliquid? And then they're pretty fast. I just don't think they're battle tested enough. And I think that if you're in Wall Street and you're playing with billions, if not trillions of dollars, your number one priority and focus is not to really speed things up and make things super awesome. The number one thing that you're trying to do is not lose your clients' funds first and foremost, and then you can make a money on the back end. We'll see. Let's see. New D.A.N channel idea. Dan's fans. That's a good one. Or just these fans or like you guys fans? That'd be the question. Yeah. Cardano's never faced a downtime as a fixed supply. Exactly. What's your strategy if the market peaks end of this year? Well, Maura, there's a links in the description. Looks like this. And they are my crypto critical videos. And one of those is when I'm selling 80% of my crypto. Some of those indicators should pop off at that point, and I will be selling like a madman. And that's it. I won't think I'll time it perfectly, but I dollar cost average in, I'll dollar cost average out. So if the market peaks the end of this year, great. I get to take a little vacation. And unfortunately, I get to, well, fortunately or unfortunately, I don't know how people feel about this, but I'll be stepping down from the channel until the next bear market comes. So let's see. That'd be the worst channel of all time. Cardano's never faced it. Rob, are you buying any tokenized stocks? I'm not. Actually, that's not true. I tested it out on Solana, and I bought the tokenized Tesla stock. I was just like, oh, let's see if this works. It was very fast and very easy. Ethereum is pegged to most. I did not know that. Interesting. Yeah. Mohammed says lower rates with guaranteed FDIC insurance for crypto will bring the average Joe exit liquidity. Yeah, and I think it's, you know, once all the different bank accounts are easily put into the centralized exchange like JP Morgan did outside of Plaid. I mean, all the banks, excuse me, all these banks, they have an integration through Plaid and you can do it. But wouldn't it be something if you go into the bank and there's like some teller, or even you get an email from your bank and says, hey, you're now allowed, or you're now offering crypto custody services. And if you're worried about this, this, and this, then, you know, don't worry about that because we got you covered. Come talk to one of our agents. You're like, I've heard about crypto. Maybe I'll go in there and talk to somebody. And they talk to you and they tell you what they're offering, and they take all the hassle, and they're FDIC insured, like Mohammed says. So much the better. That's what I'm waiting for. We'll see what happens. 11V says, how's the social metric? That's a great question. Let's steal some information. Let's see. Take this Ethereum dominance chart off. So one of the indicators that I use is just the summary. And the summary takes an aggregate of the price metrics, which are market cap risk, Bitcoin risk, Cowan corridor, fear and greed, on-chain metrics like the PO multiple, MBRV, Z-scores, and a host of others. And then the social metrics, which is what kind of Twitter followers and how many views and how many subscribers do people have on YouTube that are linked to the digital asset space. Right now, on-chain metrics are pretty low, 0.34. And to give you a sense of how this worked out last time, that's what you want to see, above 0.7. 2017, that's what you want to see, even better, above 0.8, and so on and so forth. So as we get closer here, just take an aggregate and go, wow, it's above, like maybe around 0.6, I start taking profits. 0.65, I take more, 0.7 more, 7, 8, 8.5, and sweet Mary and Joseph, if we get to 1, so much the better. I take my last bits of profits and I ride off into the sunset. So just something for you to do. Meme, I'll see you in Puerto Rico. I just need at that point, I'll need a job. I'll have to ask Steven if he needs like a janitor or something over at the San Juan Smokehouse. Let's see. Cardano gas fees are also better than ETHs. True. I think the problem there are stable coins. Yeah, they really did not do a great job on the stable coins, for sure. Jonathan says selling alt into Bitcoin if they ever rally. True. ETH is big italic. And I think that's it. Steve says, remember when you used to try 3 hosts with Ben and James, and Ben would get all aggravated that James wasn't correct on anything? Well, you just parroted Ben on everything. I'm so glad. I'm glad you're here still, top. Fantastic. And what else? Oh, Cheetah says, I have Coinbase Premium. They still charge spreads and they charge fees and advanced limit orders. Any recommendations? Yes. As far as like, first of all, if you're worried about the spreads, there's a link in the description, Crypto Critical videos, where I talk about avoid the spread. One of the things that I've been doing lately is first of all, I stopped using Coinbase like a couple months ago. I just use Kraken. I use Kraken Pro, and we actually talk about that in the video, which is this one. Beat the spread on exchanges. And I show you, because what I do is I put in a limit order. Like, let's say that Ethereum is at 3,600 bucks right now, right? So if I buy at 3,600, I'm going to get a spread. They're going to say, oh, actually Ethereum is $3,800 right now. Like, you liars, it's not 3,800 bucks. That's a spread. How dare you? And like, oh, well, we just want to make sure that, the market makers are happy and they fill the orders, whatever. And what I'll do is I'll say, if it's 3,600, I'm going to put in a limit order for 3,300 bucks. And then at some point it'll go down because it's all over the place, and I'll get it filled. So even though it fills at 3,300, there's still a little bit of a spread, but I'm getting at the price that I really wanted to. So it's like you go down, you take 2 steps forward to take 1 step back. And that's how I do it. But watch that video, beat the spread. It's a real pain. And I think it's, quite honestly, I think it's a travesty of justice that they actually get away with that. But it's just one person talking, so sure. And there was one more, and then we'll get out of here. QuickTime says, just a wild guess, how long you think the bull market will last and length of your stepping down break? Well, if I time it right, it'll be about a month, maybe 3, 4, I don't know. But I think I need to set a parameter of what is a bear market. If you look at the definition, different sites, actually, let's just pull this up now. Investopedia. And it's right here. The bear markets are essentially when you are down 20% from the all-time highs, and the sentiment is in fear or extreme fear or negative investor sentiment. So that could be, I mean, from one day to the next, it could do that. That's what's crazy about crypto. But I don't see it doing that. I think you'll have like a 20%, 30% drop, and you'll still be like, as far as fear and greed index, like right in the middle. It'll be neutral. People are like, 30%, and then you start laughing. And to get to extreme fear and 30% or 20% more, it's going to take a little bit, but we'll see. And that's it for today. Yeah. So everybody, like today's video, thumbs up, subscribe, and all that great stuff. Tomorrow, we're not doing NFA Live. Looks like Ben's traveling. Something, I think me and Guy are there, but actually, I'd probably be busy too. So we'll do this in 2 weeks, but that's it for today. So thanks, everybody. I appreciate you, and I'll see you guys on the next one. Adios.